anything. I have no idea. It could be the Fed cutting rates. It could be the bond market losing control and people wanting that. It could be anything. But I'm just not a short-term guy, you know. The last time I traded crypto was January. When I added in June, October and January. I just don't trade it. I just buy and hold it and observe. And just everybody gets so wound up about prices. The easiest thing is just buy the stuff, stick it in your ledger, just not do anything. It's a lot less stressful as well, particularly if you're not using leverage. It's so easy.
Raoul Pal's guidance to cryptocurrency investors is simple yet powerful. Abstain from action if you lack comprehension. Pal, renowned as the founder and CEO of Real Vision and a distinguished macroeconomics expert, has a notable history in Bitcoin analysis, penning a pioneering research report on it back in 2013. In his recent interview, he was confronted with a compelling query: what could be the forthcoming catalyst for Bitcoin? Pal's candid response was marked by uncertainty. He admitted to not knowing, and acknowledged that the next catalyst might unexpectedly originate from various quarters, such as the approval of a Bitcoin ETF, Federal Reserve interest rate reductions, disruptions in the bond market, or the Bitcoin halving event. While Pal didn't offer a definitive answer to the impending catalyst, he did proffer a singular piece of advice to investors: procure the assets, secure them in a ledger, and abstain from action, an approach he deems less nerve-wracking. Pal underscores that for many, the optimal strategy lies in purchasing and retaining, as attempting to time the market is an endeavor fraught with challenges. Stay tuned until the video's conclusion, where Raoul Pal delves into the macroeconomic landscape and delivers his most recent market update.
Big picture to me remains the same, is that I know everybody's tempted to look at interest rates now and inflation now and then try and make decisions about their assets and their investments. Macro, and crypto is included in that, is actually about living in the future. People are saying, well, there's going to be a recession. Look what happened. That was all priced in last year. You don't get an 80% bear market in equities, 70 in crypto, and a 70% bear market in growth equities just for no reason. That was the recession being priced. This is the recovery being priced. So the future world has lower interest rates. The future world probably has quantitative easing. The future world probably has GDP growth recovering. So you're supposed to be short equities then or long equities when you live in future world? You need to invest in future world to make money. I remember back in, whenever it was, November 2021, I bought a bunch of ETH calls. I put 5% of my portfolio in ETH calls and went for it. And
I think I've heard about this on Twitter, Raoul.
Yeah, you might well have done. And spectacularly, it called the top of the market and the ETH calls expired worthless. Also, I have explained that NFTs are a call option on ETH if they're ETH NFTs, because the price of ETH goes up and the NFT can either exceed it or mirror it or underperform it. But either way, if you get that bet right, you can actually make, so if ETH goes up 5x and your NFT doubles in ETH terms, you make 10x, right? So they're very interesting assets. So I've always said NFTs are a call option on ETH. I've also got a view that maybe, and maybe I'm jinxing it by saying it, but there's a chance we have a good bull run into the end of the year as interest rates stop rising, as the ETF launches, maybe the ETH futures ETF launches. A long time actually thinking about this. I say that flippantly, but actually I spend a long time thinking about this because all of the business cycle indicators, all of the inflation, forward-looking inflation indicators, all of the unemployment indicators are all suggesting the bond yield should come down and that inflation continues to fall, both at core level and at headline level, and that unemployment continues to slowly grind higher. So why are bonds not suggesting that? You know, while equity markets already started pricing in the fact that there's more liquidity in the system. And I think it's down to supply. I think it's really down to supply because the Treasury has to issue a lot of bonds to finance both the interest payments from the bonds that are coming from maturity and set at higher rates and the new borrowings that they have. The bond market is already trying to absorb a bunch of this stuff, and there's just not the ability to absorb it all. So supply is pushing yields higher for the time being as the Treasury rebuilds its coffers. The issue is there's about $6 trillion of debt maturing between now and the end of the year. What the Treasury have been doing is issuing short-dated notes generally to finance it. The reason they're doing that is they don't want to lock in 5% rates, because before you know it, the budget deficit explodes high.
Right.
So there's a game that I think they're playing here, is the Federal Reserve have to, and all the central banks are doing the same game, because I think they're all in cohorts, part of this everything code theory. They are going to try and hold this rates up as long as possible to make sure inflation undershoots. Because when it undershoots, they have the cover to cut rates back down to trend rate of GDP growth, which is like 1.75%. So I think the narrative will break by Q4 when we'll start to see the Fed cutting aggressively. In the meantime, do yields go higher? I don't know. I'm watching them closely. There's a risk that they do, and I'm stuck in a bond trade that's losing money. I've had a great year on technology and crypto, and having offset some of that in bonds. So I still think bond yields end lower, but there is a risk that they lose control here because of the supply side, and there's not enough liquidity in the bond market right now. And therefore, I think that increases the chance of some yield curve control, whether it's like an intervention in the bond market. And we've seen that in the past. It's not uncommon for the US to do. Japan obviously does it. The UK did it recently as well. So listen, I think this turns around, but could it squeeze higher first? Yields for sure.
So there you have it, directly from the mouth of the expert Raoul Pal. His timeless wisdom serves as a reminder that at times, the most prudent course of action involves restraint. The cryptocurrency realm is in a constant state of flux, and although predictions can be ventured, the true origin of the next catalyst remains elusive. Yet, a single certainty prevails: both patience and persistence are indispensable virtues. I trust that Raoul Pal's insights have provided you with a more profound comprehension of the intricate dynamics that govern the crypto market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.